Welcome back to Markets at Noon. All investors, all worldwide stakeholders, financial market watchers would be looking to what's happening in the OPEC meet today. Today the meet starts and tomorrow it ends. So tomorrow is when you should get entire details. A lot of media would be covering this. Even international media would be going and traveling down to Vienna to try and cover this entire meet. Let's get some perspective from Platts. We have Mriganka joining us, Associate Editorial Director, Asia and Middle East, Platts. Ma'am, what do you make of the OPEC meet, the noise around the OPEC meet, that, how much of a production supply could increase?
Yes, this is certainly going to be a very long and contentious meeting that we're going to have today in Vienna with two distinct camps. You've got the Saudis, the Russians seeking to boost production, and you've got the Iranians and the Venezuela and Iraq looking to maintain status quo. According to S&P Global Platts Analytics, we think that the agreement, we think that OPEC would agree to supplying about 1 million barrels per day of extra crude in terms of just quotas. Now, how much that translates into actual volumes will depend on how much spare capacity each country has. As you know, Iran has been producing, Iranian oil supply could get disrupted due to the U.S. sanctions. Venezuela has been producing well under its quota. Nigeria has been having production problems, and now Libya is having production problems. So overall, the actual increase of volume that comes into the market would really depend on how much the countries with spare capacity are willing to boost production.
Where do you think is the flow for the crude prices, and where do you think is the maximum that crude prices can go, ahead of which the supply would start to increase? So what's essentially the range that you're looking at in terms of crude prices over say a 6 months period?
Yes, again, talking about Platts Analytics price forecast, we're expecting prices to be in the range of $65 to $75 per barrel, but there is significant upside risk to this, especially as we get into Q3 and Q4 when the U.S. sanctions against Iran kick off. Venezuelan production has already been in free fall. They're producing about 1.36 million barrels per day, which is close to 1 million barrels per day below what they were producing 2 years back. And the IEA estimates that it's going to go down to 800,000 barrels per day next year. Libyan production, they're trying to divert production away from the into storage terminals, which are on the where there haven't been any attacks, but the main export terminals are suffering severe damage because crude storage tanks have been destroyed over there. So even if the Libyan National Army has taken over those terminals, how quickly are they able to repair those tanks, and how quickly are they able to boost supply is a question. So you have a lot of supply side risks that is expected in the next 2 quarters, which provide significant upside risk to this price range.
Hi Mriganka, good afternoon. This is Nantara joining in from the New Delhi studio. Today we all read about the drama that unfolded in Vienna yesterday with Iran walking out. Now my problem is here. Saudi Arabia's stated position is that it's on board with Russia to increase output, but it's also talked about its ambition for an $80 a barrel price. So how am I supposed to juxtapose those two together? This is just a new public statement. And even if you do increase production by 1 million a day, even Saudi Arabia concedes that the impact is going to be marginal. Wouldn't that be right?
So Saudi Arabia, this is, like I said, this is going to be today's meeting is going to test Saudi oil diplomacy, I think. Saudi Arabia has a lot at stake here. It cannot afford to completely alienate its OPEC members, but at the same time, it needs, it has to pay some attention to what its ally, what America is saying. And it has to, and not to forget the Saudi Aramco IPO that is targeted for next year. It needs a certain oil price for that IPO, and that the oil price that has been publicly stated is about $80 per barrel. And it needs to ensure that through cohesiveness within OPEC, it is able to control the oil markets going forward. So Saudi Arabia has a very fine balancing act to pull through today, and it's anybody's guess. I mean, we're all watching eagerly to see how the Saudi Arabian Energy Minister Khalid Al-Fali is able to do that. Talking about Saudi and Russians looking to supply an additional 1 million barrels per day. What they're saying is that the market is tight, according to their reports, according to what their technical committee has discovered. It is going to be about 1.7 million barrels per day extra crude demand in the second half of the year. Crude demand typically goes up in the second half of the year as refineries are coming back from maintenance. Now, OPEC is already producing well below its quota, so. The fact that they want to boost production is not a surprise. I mean, the market is tight, and too much tightness could lead to a price of way above $80, which is not in their favor either.
Okay. What's also very heartening, and I'm going to say this as an Indian, because if I read most influential global newspapers, wire agencies, they're also talking about how India, along with China, is responsible for putting pressure on the OPEC, and why Saudi Arabia has had to say, we need to listen to our customers. So do you think that's really working, where the consumer countries have really been able to pressurize them? You said OPEC realizes that maybe it's not in its interest to have an $80 price, but it'll also be very wary of what happens in the United States, right, with the shale gas production, the kind of production that we may see in North America, including Canada.
Yeah, so the shale oil story is actually very interesting. I think until about 2 years ago, shale oil was directly competing with OPEC for market share. But if you look at what is happening to shale oil right now, production is not going up at the same rate. And given all the infrastructure and pipeline takeaway capacity constraints, shale production is not expected to go up significantly in the next at least until the second half of 2019, when new pipeline capacity gets added on. So that the shale boom that we saw, which drove prices down, is going to take a bit of a setback in the next year or so, at least until the second half when they have expanded capacity. Talking about countries like India and China, of course, as oil consumers, they are very sensitive. Their economies, their fiscal budgets are very sensitive. Their trade budgets are very sensitive to high oil prices. So them telling Saudi Arabia that they need to loosen the taps and produce more is not entirely surprising. And Saudi Arabia also recognizes the fact that countries like India and China are very large and stable customers of Saudi Arabia. So they have to pay heed to what these countries are saying.
Mriganka, thank you so much for taking out time for us. Once the OPEC details are out, we would like to touch base with you once again on what has happened in the OPEC meet and what's the outcome of that.